professionalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to our frivolity first thing in the morning. Actually, I keep forgetting that we've got a nice little intro video, so I don't have to do the whole "Hey, welcome back" and all that. So, anyway, howdy, everyone. It is officially FOMC day. Been a little bit out of it here this morning, kind of tentatively sort of convinced myself that I wasn't going to be trading ahead of the Fed. I was watching the crude market. Of course, we had oil inventories also today, which is a pretty significant driver for the oil market. And came really close to taking a trade. I had location, it was a minor 4-hour level. I did have some bear divs pushing higher on the move up top. But the M top, and then of course the final piece is I want to see some sort of market structure to frame the risk. And I'm looking for a move back to the VWAP and just a return to the mean. And you can see that the top was 33 ticks. And unfortunately, that's just too much risk to take. On the little account that I'm trading for Top Step, really, I don't want to risk more than about 20 ticks on any setup. So I was close to taking a trade. Oil inventories came out. A little bit of a drawdown in the crude. People were expecting that. A bit of a drawdown in the unleaded, but not a huge number. They were actually looking for a little bit of a build, but very, very minor numbers. And this time of year, we probably won't be thinking too much about unleaded. We'll be thinking more about heating oil inventories. But of course, all the Gretas of the world and substitute drama teachers want us to freeze our asses off. We're not allowed to use heating oil anymore. Oh, well. So point of the matter here is I was contemplating getting short. In fact, actually, I had even sort of mapped out where is 21 ticks of risk, and I had my open order working. And on the confirmation of the breakdown, I was more than happy to sell some at these candle body highs, and the market just didn't come back. Boo, hiss, hiss, boo. It's a trader's life. That's the way it goes. Sometimes you just gotta live with roll with the punches, as they say. It was a cute little trade that came in up top here. 8s and 9s on the Tom DeMark. Nice inside bar. They even did a little FU bar and a big outside downside reversal. So as you can see, I clipped that for a couple of shekels. But this was kind of messy because I had taken a shot against these highs, so I was actually underwater. And this is like sim account, just paper trading. No, I took some money from the market and on balance, but I wasn't really impressed with that. But no combine trades today, unfortunately. And as you can see, stock markets and the whole markets in general kind of just sort of pause, getting ready for the Fed. Interesting that the Dow is up as much as it is. It's kind of cautioned you guys recently, and yeah, this is getting worse. This is actually a really good example of what's called Dow theory. Charles Henry Dow lived 100, 200 years ago. I guess 200. Yeah, well, I guess we'll call it 100, 120 years ago. Founder of the Dow Jones Industrial Average, Wall Street Journal author. In fact, that's where he did most of his notations of stock prices. And the journal ended up becoming basically the Wall Street Journal that you all know and love today. But more importantly, if you see a move higher in the industrials, but it's not confirmed by the transports are in yellow, industrials are in teal. There's a major, major warning sign. So the fact that the transports were breaking to lower lows here and the industrials were not. And then the industrials ticked higher here. They're up like 200 points on the day. That's not a good sign. That's usually a harbinger of bad things to come. So, very tough for me to get too uber bullish in the stock market. Interesting to see. We did have advanced decline line jump up quite dramatically, and as a result, the put call ratio collapsed. That sometimes is also a notation of sort of the end of the move. And I did see that the trend, and I don't know whether it's a function of trading view, but I noticed that the trend spiked up quite a bit the other day as well. But that might have just been a trading view anomaly. I don't know. And why all the stress? Well, it's more about these interest rates. We've been talking to you guys recently about how getting a little concerned that yields are actually breaking out to new highs. And our inflation deflation gauge is just flirting with breaking out to new highs. And if this thing does tick up through the top, then it means that our problems with inflation are not over yet. Here's the 10-year treasury. You can see that it did tick up to new highs yield wise. And I did notice, although I don't think this is updated, but I think actually the news even came out today, that the US 30-year MBA 30-year US mortgage rate is now 7.31% when it was 7.27 earlier. Is that a breakout to new highs? You can see. Obviously 7.31, pretty important level there. So we're sort of flirting with disaster. And I think that's what you see out of things like this inflation deflation gauge. And I guess that's it. I'm not quite sure what TradingView is tracking here. The old high there, 7.23, but I think I'd rather go with that government data there. And this says 7.18. I'm not quite sure where TradingView actually gets these numbers, but they are slightly different than the official news release. So, not getting any reprieve out of this part of the market. And of course, we've got the Fed today. And been hearing a lot of people sort of chattering about how the Fed is probably not going to be too impressed. The intraday 3-minute chart doesn't really say much, but like the daily price chart on crude oil, this has been one steamroller of a market. And as you can see from my AB equals CD objectives, I don't think this bull is done. And if anything, to actually paint the top, what we probably need is for prices to back up, maybe tag 13 EMA kind of idea, then ramp up and make new highs. And that's done on a divergence. And then we have trade location. This is Hoag's weekly kickoff levels. I've got like Foggenbaum's off of this consolidation in price. 1.618 off of this basic. This would be like a parking garage kind of concept. So the fact, and then also to that 1.618 lines up nicely with this AB equals CD objective. Actually, this really big one. This one, boom, 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 all the way up there. So I like this area up here for trade location. Not really too enamored with hunting like tops other than maybe day trade kind of ideas. But I wouldn't be surprised if crude has to work its way higher. And I'm hearing a lot of people saying that the Fed really doesn't like this. And probably the propensity for them to raise rates one more time here before we get out of 2023 is probably based purely on this rising energy market. And also too, I mean, the stock market, it isn't tanking here. If we look at something like the Dow, and really the way that I like to do this up here, I always like to follow the ES. It's sort of like, it's not the tech, it's not the old school, it's sort of like a mix of everything. And this to me kind of looks like we're just sort of stuck in a trading range. And again, good old Hoag's weekly kickoff levels basically defining the range. I've said, and I've said this before, I said it to another person this morning. In fact, actually, I had a really long conversation with Raf out of the UK. Corby, downtown Corby, the center of the universe. It was great talking with Raf today. God, I love talking with him. He's such a sweetheart, absolute gem of a person. So privileged to have all of you people in my life. I really am. I can't be thankful enough that Spirit has brought all of you beautiful people into my life. So thank you, Spirit. And if anything, I should be eternally grateful and humble and appreciative of this gift that the good Lord has given me. Anyway, nice chat with Raf, and we were talking about Hoag's kickoff levels. Again, Hoag is another guy. If you can get a Hoag in your life, it's definitely worth. And for $50, there's good old John back in his pit days. But every week he spits out kickoff levels that he likes to follow in the various markets that he trades. And I think that this is worth $50 a month subscription price alone. I mean, look how the NASDAQ, his kickoff levels basically define the bottom end of the range and the top end of the range so perfectly there. So thank you, John. And, I mean, I'm in their fun little combine. The only problem is in this one-way market, I'm only trading crude with them. I don't want to overwhelm things. And I signed up for their combine in here, and it's just been a one-directional market. If you could hunt pullbacks, but you can see we haven't even gotten like moving average tags or anything for me to get in here. So it's been a bit of a challenge coming up with trade ideas for the combine people, but well, it is what it is. Most important thing, and what I say every single day when I wake up. In fact, actually, we had our level 3 class yesterday, and this term for the level 3ers, I'm teaching the course. And yesterday, Pro Traders Workbench module, and basically going through what do I do? What does my morning routine look like? I mean, anybody who watches these videos on a regular basis knows how much work I put into getting ready for work every single day. And I have my affirmations, right? I am the demonstrator of best practices. So I have no business taking trades in the Top Step Combine tryout account that are not in my trading plan. I have my trading plan all perfectly vetted. And there's nothing wrong with going and changing your trading plan following sort of like I suggest you do like 20 trade increments. And I might change the trading plan, but this is the trading plan that I outlined for this particular trading sort of session. So basically, I have to be the demonstrator of best practices. And what that really means, and it was actually a lot of fun going through things like the Demon Finder and stuff with the students yesterday, is I don't want to see any notations in here. This must remain completely blank. If it doesn't, then really I have no business actually teaching you people how to quote unquote trade, because it means I can't do what I say I'm going to do. So as I said, every single morning I have my affirmations, also my visualizations. In fact, I didn't even really do it this morning, so I was a little sloppy. I made it today, but I do like to visualize what an ideal trade looks like, identifying a higher time frame level, identifying confirmed momentum divergence, identifying price structure, and then pulling the trigger. Unfortunately, though, I just didn't have any setups that really came through this morning. And subconsciously, I really didn't even want to trade today because we do have, of course, the FOMC coming up here later on. Actually, I guess that would be over on the daily checklist. So I don't know what it is. The good Lord here is giving me a hard time sleeping lately. So a bit of another crazy ass night. Was up at like 3:30 this morning. It's no idea. Maybe I'm on Joshua time because I know he gets up at that crazy ass time in the morning. So getting ready for the day, demonstrator of best practices. What should we do? Fed said to deliver a hawkish hold. A hawkish hold. That's kind of a weird statement, but nonetheless, I think that's actually probably pretty accurate. Whereas I said earlier, the scuttlebutt is sort of like the Fed is not happy with the way, and like in Canada, the inflation rate's ticking back up and threatening to break out again. So I don't think the Fed's done raising rates. The question here is, do they just not do anything here today? And then do they do another rate increase maybe in November? I don't know. We'll see. And then of course they'll say we're data dependent. And also the key here, I think what's most important is, and I was telling people that Mr. Gammon, I think he did a pretty good job in his video, kind of outlining that usually within about 6 months or so, following them actually pausing and not raising anymore, usually something breaks in the economy and boom, down go things. So um, I wouldn't be surprised if Q1 of this coming new year is going to be a bit of a challenge. Also, too, and we've talked lots about this. Actually, probably the best place to show you this, and this should all be review for all of you, but nonetheless, I've put out, in fact, actually tonight, Wednesday, going to do another show with the good people at Coinigy and Joe. And I put out a Coinigy piece, it's probably weeks ago, just outlining how, like there's just too many coincidences here. So if we're thinking that the market might go into recession, which I think in the States it'll be a mild correction. I think, places like Canada could be absolutely destroyed, but, they deserve it. This stupid bubble needs to pop at some point. But yeah, this is the image, all you Bitcoin enthusiasts. And actually, I like this thinking even more now because the reaction that people actually had of me saying, well, we're probably going to have to come right back down to the lowest. And they're going, there's no way that's ever going to happen again. So the fact that they say that there's no way it's ever going to happen again means that it probably is going to happen. And then, of course, Joey Diamond and JP Morgan came out recently and said that they figured that Bitcoin's cost of production was around 12 or 13,000, which would be a nice polite sweep of these lows. And in this really screwy environment, that almost seems like par for the course. I see FU moves everywhere in this market. So that would kind of correspond with what I'm talking about with, things like maybe we muddle our way higher here in the short term, but things like this bond market problem is not going away. The disconnect between the industrials and the transports, there's something wrong there. Um, and then thinking, I guess, like the interesting thing about the stock market is that the breadth indicator right now it's not very happy. I mean, this is an ugly image. I think probably this sets up some sort of bottom in, like, middle of October or something like that for a seasonal rally into the end of the year. But I'd be really interested to see whether they could actually take the market back up to new highs into the end of the year. I got a funny feeling you're not going to see it. And you want to see something that last night, and what time is it? I still got a bit of time. Last night, we had our secret options formula club meeting. It's sort of like people who've actually completed the education program. We get together every Tuesday with a gentleman who actually won our first education program. And now he's just a total badass trader. And you want to see what he's most bullish about? This will shock you. Mind you, it probably does. It probably won't. But he shared this image, and I'll share it with the public. Good karma. I'll probably mention this in our Sunday newsletter. But look at that chart. Holy free, holy. So I couldn't believe that when I saw that last night. This is like David's bread and butter. He absolutely loves these patterns. This is called a Adam. Use your imagination. Adams over there, Adam C. This is an Adam C. Or I guess, tongue in cheek. This is Adam C. Right? This is just Brian. This is Adam. I'm being silly. And this is an Eve. Just the most, this is like absolute textbook TA 101. Couldn't believe it when I saw that image. And so when I saw that, I was just like, I have to buy this. I have no choice. I have to buy this. So I threw 500 bucks of this into my registered account just for fun. I'll sell half on a double, get a free position, and then who knows where the hell this goes down the road. But look at what this is. This carbon credits crap. Klaus, substitute drama teachers, and the whole fucking thing. So I thought that was really interesting. And of course, David, he's very attuned to all this stuff and rather politically correct and very well oriented and always says and does the right thing because he's so awesome. So I'm just going to ride his coattails. So anyway, there it is. And I mean, look how far this thing has fallen. I mean, there's the highs way up there. That's like what, 25 bucks. So I'm coming in here at 250, like 1/10 the highs, and look at all these gaps. So you know at some point down the road, all this crap's going to be filled in. So anyway, very interesting development there. So I thought I'd take a moment and share that with all of you. And as I had sort of said there, oh, you want another thing I wanted to show you, which really shocked me. I couldn't believe this. So, you know, you see a lot of these companies like Microsoft. Oh, geez, does that not look like an M top trying to form? So we were kind of postulating last night, and you know, it's quite remarkable how cliche this stuff is. So, I mean, look at how we came right down to that 4669, right into that level. Isn't that incredible? So, you know, was this telegraphed? I don't know. And then, of course, this big double bottom is this 2.618. Oh, look at that. Just totally nailed it. So we were kind of sitting there last night going, well, would it make sense for this thing to M out? We are getting very, and these are weekly price chart, right? On the dailies, this thing's looking really heavy. And, you know, like if you look at some of these other ones, like Netflix was the one that sort of kicked everything off. And look how Netflix is just getting absolutely destroyed here. And now I think you can actually make the argument this is a daily chart, just like we did with the Microsoft and stuff. We could probably start doing that kind of move. Oh boy. So interesting. Look how 4669 takes us right back down to fill in a gap down to the original bottom here. There's a juicy gap there to be filled in. Actually, I'm a bit surprised there isn't any gaps in here. Probably is on the dailies. So there's some serious technical damage going on here. And this is what really surprised me. This isn't even the fun part of what I wanted to mention to you guys is, how am I going to do this? You know, like look at the, I mean, Meta hasn't broken down, but geez, look at the size of that hole on the charts there. But what I wanted to show you was Amazon, that's another one that's kind of threatening to break down here. You can see, whoops, that's Microsoft. Sorry, guys. Whoa, what the hell? Where did, oh, isn't that bizarre? Anyway, I thought I had Amazon on here. There it is. Is Amazon starting to potentially break down? Interesting how Amazon could not get up through these highs. So last night we were kind of postulating, man, could we maybe have an inverted head and shoulders forming here? Which means that we need a right shoulder, which that's going to be a pretty big move. And what I wanted to show you guys, this is shocking. I couldn't believe this when I saw this. So I'll show you Microsoft in a moment. But, you know, I don't know whether you remember in 2020, in January 2020, Jeff Bezos was selling his Amazon stock like a son of a gun. And insiders were just selling tons and tons and tons of stock. So clearly everybody knew something was going to happen. That's half of the reason why I think the whole sickness thing was just a load of horse shit. They knew what was going to happen. So here's Amazon, and watch this. This is incredible. You tell me, are insiders buying or selling this stock? Sale, 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 options exercise, So all the options that they got, they exercised them so that they could sell, 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 options exercise, sell, 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 sell. The only buy in this entire freaking sheet was Jeff Bezos in May bought one share. Now, what the hell is he doing with that? A value of 115 bucks. I think that was just so that he could say, well, not everybody's selling stock, but one share. Other than that, everything else is a sale. Oh, that can't be a good sign. It cannot be a good sign. And then, we did the same thing on Microsoft last night, and we're like, all right, so I don't know. What do you think? Do you think insiders are selling this stock? Oh, you tell me. Wow. Sell, 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 sell. In fact, actually, not even really that much. But just nobody's buying this stock. Isn't that incredible? It's, so the writing's kind of on the walls. This is just like January 2020. And I remember barking about how brutally blatant the options expiry was through that January leaps event, and how it just had insider, selling and market manipulation written all over it. And I got a funny feeling they're doing the same thing again here, folks. So just be prepared. Now, kind of like what I showed you with Amazon, I don't necessarily think this is going to be a crash. Ironically enough, all they're going to do is just take back the rally from 2023, right? Maybe we're expecting Bitcoin based on our fun little analysis. And frankly, yeah, all right, running out of time. And thank you very much, Chris, for just being just so awesome. Everybody give a big round of applause for Chris, because there's no way I could do this without him. So everybody give a shout out for Chris, please. I thought I had it on here, and then I can't remember what I was looking for now. Mr. Short-term memory. Oh yeah. I mean, really, all I'm expecting is like names like Amazon to just simply come back down. But I mean, think about this in real terms. That's 80 bucks. That's $150. I mean, a pullback down to $100. I mean, that's like a 30-40% correction. So did the names, did they just get going too far, too fast? I think that's what's going on here. So I do like the idea of considering the market like pullbacks are buying opportunities. And there are some really fun little names like this carbon credits kind of thing. I haven't seen chart patterns that look like this in quite some time. This is a politically contentious thing unto itself. But that was a very interesting share that David gave us last night. And thank you very much, David. You're fucking awesome. And I liked it so much, as the old guy from Remington. I liked it so much, I bought the company. Well, I can't buy the company, but hey, at least I picked up a couple board lots. All right, yay, Chris, big clap signs. I guess that's what that is. So actually, the thing I wanted to finish off with this, and it's probably a really good analogy of the impact of money supply on economies. You constantly, and if you're not in Canada, of course, you wouldn't know this, but anybody who's actually here in Canada, the hyperinflation has not stopped at all. But I do see down in the US that the price inflation pressures are really coming off. And in fact, there's even parts of the real estate market that prices are actually falling appreciably. And I did show you that video about Mr. Gammon and his sort of predictions of when the market should break and how real estate's probably going to come back down to earth. There really is almost none of that here in Canada. Why? And, this is more sort of educational than anything that's going to happen here in the short term. Keep in mind that I think we'll fire up there's the bleeps again. I don't know. Hey, Meg's here. Hi, Meg. Nice to see you. And hi, Eddie. Eddie's saying hi to everybody. I think, for the FOMC meeting, we load up a video. And if you do enjoy Brian's crazy bent on the world, maybe consider joining us. We do like an hour and a half long video through all that Fed stuff that we'll do. We'll load that up in about 2 hours, roughly. Um, and and then we also have the Coinigy show tonight. So there's a whole bunch of stuff that we've got on the hopper. So just be sure to check out that. Well, I can't guarantee you, but I'm almost 99% sure Adam will be at that call tonight. He is almost there almost all the time. Of course, this is all the sort of North American audience, poor Europeans. It's the middle of the night for you guys. Sorry. But be sure to check that out. It should be a fun adventure with Joe and the Coinigy people. But just as a closing thought, and if you want to educate yourself a little bit on what is inflation, 50 years on the planet, 30 years working in and around the market, I've never met a better person to educate yourself on economics and what causes inflation, how does it work, than Mr. Milton Friedman. I think he does an absolute fantastic job. You can do some Google searches, I'm just showing you who he is. And, there you can see how to spell his name if you want to do Google searches and YouTube searches. Tons and tons of videos on YouTube and stuff. And I think he's like, if there was an economist that I would respect in this world, it would be good old Milty. And his basic theory is that inflation is nothing more than the printing of money by governments. And it makes sense. More currency units out in the marketplace. I mean, the marketplace itself, a loaf of bread doesn't change. I mean, a loaf of bread is a loaf of bread is a loaf of bread. If you start skimping on the ingredients, I remember back in Industrial Revolution days in England, they actually took the husks of wheat, and then there were like little shells around the husks of wheat, and they separated the grain from the little shells that were around the wheat, and they started making bread and sold that bread just made out of the shells of the seeds of wheat to the poor, and the poor actually ate the wheat and starved to death because there was just no nutrition in that. So, if you fuck around with the actual basic components of the food, okay, well, that's understandable. But if you just a loaf of bread is a loaf of bread is a loaf of bread, it's not going to change much. So how do you explain the price of a loaf of bread doubling? And it has nothing to do with the loaf of bread. And this is the same argument that I've made with about Bitcoin. I mean, it's interesting how they've built in the halvenings to sort of keep pace with this money printing nonsense that's going on in our society, Great Reset, all that kind of conversation. But really simply put, it's just a function of how many currency units are there in the marketplace. And as I said to you just a few minutes ago, I'm definitely seeing that in the United States of America, the hyper price inflation is not that strong. So here you can see this is the M2 money stock out of the Federal Reserve for the states. And you can see, I mean, it's not dramatic, but they're trying like the Dickens that they've basically reduced the money supply by about 5%. And we would like to see this continue to contract and bring this back down to real levels, because the money supply growth has been absolutely ridiculous. It's like tenfold increase in the money supply. So I can see the economy down in the States is contracting. Prices are begrudgingly, especially in the housing industry and housing market, prices are starting to come back down to earth. So it makes sense. Fed's trying to reduce the balance sheet, trying to reduce the money supply in the economy, and the inflationary runaway train is sort of coming into check. You go north of the border into communist fucking substitute drama teacher idiocy land, there is no check here. This thing, it's like within a hop, skip of a jump of basically breaking to new highs. And so as a result, communist Canada Hey, keep raising the price of the groceries. Ain't no stopping here. And then, of course, you add in all this stupid idiocy of things like carbon taxes, which just like literally gives the gas retailers and all the energy companies, oh, well, we're going to just pass it on to the customers. So more inflation. I mean, it's just runaway fucking train. So really, really good, rubber meets the road, economics, Milton Friedman. You can actually see it happening in real time in our societies. Prices are calming down in the States, things are settling down. And just the inflation print yesterday, I think it was yesterday or the day before out of Canada, showed that inflation is actually coming in hotter than expectations in Canada. And you see the money supply growth. These look like basically apples and oranges, completely different. And this is, a lot of people sit and say, we shouldn't have the banksters controlling the money supply. It should be the government. Well, here is a situation where you have a little commie bastard who's never worked a hard day in his life, who is the government. And the way the Canadian government is built, he could be a little despot there and do anything he wants and is not responsible to anybody. At least down in the States, you have some checks and balances, and the president is constantly getting it up the butt from Congress. And, in this case, that probably you could even argue that this thing stopped going parabolic the day that the Republicans took over the House of Representatives. And in essence, you've got checks and balances back in government. So, commie government, democratically distributed distribution of power with checks and balances government. And so as a result, you get a little bit of sort of a reality brought back into the market. I'd also say to this, and this is probably, I'm going way too far. So actually, why don't we leave the rant at that? I think this image right here on the screen, it describes what I see happening in our society beautifully. And the long and short of it here is I have said repeatedly, I am bullish of the United States of America, and I am overtly bearish of a country like Canada. And I've said it repeatedly, Canada is a short, and really Canada is not a short the day that this thing actually is brought back under control. But as long as commie dictators are running Canada, I don't see any reason why that's going to stop at all. Anyway, end of rant. Merry Christmas. All right. I hope you have a great day. PMA for the win. Slow and steady wins a race. I'm not quite sure what we're going to do here today because we do have the Fed meeting in about an hour and a half or so. So I don't know whether we need to do an after party. I think we'll probably just take a break and then we'll load up for the Fed meeting. And if anybody has questions and stuff, we can always circle back around and answer those. So be sure to watch out, especially on the site. I don't think we publish it on the free YouTube channel. We might, but be sure to watch out for that Fed meeting. It's a fun little group, and we have a lot of fun bantering back and forth. And I can tell you, I've said this to you before. It's never a good sign to see the market rally into the Fed. That usually is a bad sign. So anyway, never a dull moment. Okay, Brian, can you please try and stop talking now? Have yourselves a great day. All the best, and bye for now.